But I thought I'd talk today a little bit about taxes, given that it's we're in the election season, and we today I hope everybody's voted. I lost my little sticker. I voted this morning as I came in, but it's so important to exercise that right, and it's also so important to be informed about what the issues are that are on the ballot in the form of the candidates. So today's presentation I've been calling "Squeezing Blood from a Gill Feather Turnip," and I call it that because we've all heard the expression of squeezing blood from a turnip. And this past year, in case you missed it, I can't believe you didn't miss it if John is a member of this group. I'll give you the story about the gill feather turnip. But as of May, the gill feather turnip is the state vegetable here in Vermont. Our legislators who did a lot of the taxing and spending that I'm going to go through also made this root vegetable our state vegetable. And I thought it was appropriate that they did so because they're constantly squeezing the turnip to get more and more blood from it, that being us. Governor Shumlin, going back, so we're going to talk a little bit about the past, the present, and the future of the tax scenario here in Vermont. And this is back in two quotes from him from back in 2007, when he had just come back into the Senate after a long absence and took over as Senate President Pro Tem. He said, "We are spending too much and have used up our tax capacity." That was on You Can Quote Me, WCX program, on January 14th, 2007. And then later in the year, he said, "It's just not there." Speaking of tax revenue, we are tapped out. And I think most Vermonters listened to that sentiment, and they agreed with that sentiment because we have a very high tax rate. It depends on whose numbers you look at, but in surveys and rankings throughout the country, Vermont tends to fall in the top 10, if not the top 2 or 3, in terms of the high tax states in the Union. But over the past 6 years, since Governor Shumlin got elected governor, we sort of threw that sentiment out the window of us being tapped out. So overall, they passed $128 million plus almost $129 million in general fund taxes and fee increases on Vermonters over those 6 years. Over $150 million were the property tax increases over those 6 years, and a $56 million increase in taxes on diesel and gasoline. So that's squeezing blood from the gill feather turnip. We were tapped out in 2007, which is what has happened between 2010 and today. Despite all of those major tax increases, we're still running a structural deficit. That means that they are spending the money faster than we are giving it to them. And overall spending is going up every year at a rate of about 5%. So when they say we're dealing with a deficit, they come back and say we haven't raised enough money to pay for the budget. It's not that the money's coming in lower. It's we're paying more and more and more every year. It's that they're just spending it faster and faster and faster than we can replenish the treasury. So since going back to 2014, when I can find the numbers for it, we had a $60.5 million structural deficit. That's when they come back, they have to readjust the budget. 2015, it was a $113 million budget gap. 2016, $100 million budget gap. 2017, a $30 million budget gap that is projected when they left the session, but that does not account for the $16 million revenue shortfall that just came in with the latest round of tax receipts in April. So look for that number to go up a little bit more. Now, let's talk a little bit about population. Because it's one thing if you got, as the old saying goes, many hands make for light work. So if our population were growing, it might make sense that we're paying more taxes because we have more people who are in need of services, and we also have more people who are paying taxes. But if you look at the population of Vermont between 2010 and 2014, which are the latest numbers I have from the census, we've gone from 625,741 Vermonters up to 626,562 farmers. Just a meager increase of 821 people, statistically insignificant. So that means all those tax increases that I went through in the first few slides are being borne by essentially the same number of people. And even worse than that, though, if you look at the labor force, these are the people who are working in the Vermont marketplace, the taxpayers, people who are generating tax revenue through the income tax. It has actually dropped by 13,000 between 2011 and 2016. So we've gone from 359,000 people roughly in the labor force to about 346,000. So it's actually fewer and fewer hands doing the heavier work of paying that overall tax burden. So this has to stop, right? They've squeezed as much from the gill feather turnip as they possibly can. If we had squeezed enough from the turnip in 2007 when Peter Shumlin first got elected, and we've squeezed all this since then, it has to end, because I forget who said it, but whatever can't continue forever won't. But I just want to go from this point on a look at the future, because as I said, people are going to the polls today to pick who they want to represent them in Montpelier in terms of the primary, and then they'll go back in November. These are some of the ideas that have been discussed by candidates to various active groups around the state for passage in 2017. First one, the biggest one, is a carbon tax. And this has been a big focus of the Ethan Allen Institute, and I'll pass this around to folks. I hope I have enough, 20 of these. Talking about the carbon tax, this is what will ultimately be a $500 million a year excise tax on gasoline, diesel fuel, home heating oil, propane, natural gas, and butane, aviation gasoline, and a couple of other little things like that, or butane. They're going to ramp it up over a 10-year period. It starts out at $10 a ton per carbon emissions, and going up to $100 per ton over that time. Ultimately, what that means for folks like you and me is an 88-cent per gallon tax on every gallon of gasoline you buy, $1.02 per gallon of diesel fuel, 58 cents per gallon of propane and natural gas, and similar tax increases for the other fossil fuel burning. I'll put this in context. The carbon tax would, as I said, ultimately raise $500 million a year. That's a lot. That's a huge tax increase for Vermonters. That's about a third of total general fund spending, which is $1.47 billion for FY 2016, and it puts it on par with the current revenue that comes in from the income tax, and it's twice what we raise currently in sales tax. Now, the folks who are pushing this say that 90% of this is going to be returned to the taxpayers in the form of rebates and tax cuts. They want to cut the sales tax from 6%, where it currently is, to 5%. But that does not make up for what the average middle-class family is going to have to pay for in terms of heating a home and driving their car, not by a long shot. And one thing that you need to know, and this is on the document that we sent around, that's very important, is the only rebates that go, when folks from VPIRG, if they give a presentation, say it's going to be returned by tax rebates to folks, only families 200, or households 200% of poverty or level or lower will qualify for that rebate. So if you're in a household that makes more than $25,000 a year, you're going to shoulder the entirety of the burden. You're not going to get anything back. So that's a big one, $500 million a year when they get it fully implemented. Dr. Dinosaur 2.0. Dr. Dinosaur 2.0, well, Dr. Dinosaur was put in place by Governor Howard Dean back in the early 90s, and basically it puts all children on the Medicaid rolls and makes sure that all children are covered by insurance. It's been a very popular and successful program. But what they want to do now is called Dr. Dinosaur 2.0, and that's expanding the children's Medicaid to young adults who are 18 to 24. Did I say 24? I did. That's a misprint. It's 18 to 26. 18 to 26 years old will go on Medicaid rolls. This comes with a $400 million price tag. They haven't identified yet where that $400 million is going to come from. There's some other healthcare taxes that they look to, payroll taxes and whatnot. But here's a couple things that you need to know about Dr. Dinosaur 2.0 in terms of the taxes. Medicaid is already the primary reason for that budget gap that I described in one of the earlier slides. When we come in every year and say we haven't raised enough revenue to pay for it, historically it's been Medicaid that has been the big bugaboo. This last year we were looking at about $100 million in a budget gap. 70 million of that was Medicaid shortfall. So you're going to put $400 million on top of that $70 million deficit that we have in Medicaid. And the other thing that's really equally important is sort of the unintended consequence, or the hidden tax in this, is that when you take these 18 to 26-year-olds out of the private insurance market, they're the healthy ones who spend the money on the insurance and tend to not use a lot of medical care. It's going to cause the private insurance market that's already very high in Vermont to skyrocket. Your premiums are going to go up. And if you remember when they passed the Affordable Care Act at the federal level, that was how they were going to make that financially viable, that program financially viable. So we're going to get all these young people into the system by either forcing them to buy the health insurance or making them pay a fine. Well, basically, in Vermont, we would be removing all of those people from the rolls. So it makes the underlying health care reform at the federal level financially unviable in the state. So it's, to my opinion, not a very wise use of $400 million. And, but the majority in the legislature disagreed with me last year. They decided to spend $100,000 of your taxpayer dollars to study Dr. Dinosaur 2.0 in preparation for the 2017 legislative session. So that one's coming down the pipe. Universal primary care. This is another big one. $240 million program that they're talking about. And it would be paid for with a 2% payroll tax. So when folks who are in business or receive a salary, a 2% payroll tax would raise it $240 million. And basically what this would do, it would pay every doctor in the state a per capita stipend to allow patients to have primary care with no co-pays, no added costs at all. You just go into the doctor's office and say, I'm here, I want my primary care, you're my primary care doctor, and you get whatever service the primary care doctor offers you will offer. You'd still need to buy insurance for non-basic care. If you get in a car accident or if you have a major medical issue or a major surgery, you still need to buy insurance for that. And it's important to point out that 95% of all the cost of medical care in the state, and I think it's a national statistic as well, 95% of that is for the emergency care. So you'd be paying $240 million to cover 5% of the cost of care. And this is really sort of a second bite at the apple for a lot of activists who are very much in favor of single-payer health care. This is sort of their way to try and get that single-payer health care ball rolling again, which would be essentially a single-payer health care system for primary care, if not emergency care. If they can get this set up, then the next step will be to have a single-payer system for the whole tamale. Next program coming down the pipe, I'm sure you've heard a lot about this one, is free college. This is anywhere from $12 to $45 million program, depending upon which candidate is making the proposal. All three of the folks running in the Democratic primary today have plans for this, and they range between that $12 and $45 million. Plan A is to increase the capital gains tax to raise the money. Plan B is to increase the bank franchising fee and create new corporate taxes targeting banks. And Plan C would rely on a number of tax increases, including a tax on cloud computing services and closing income tax loopholes. It's sort of a potpourri there. This one was actually a $45 million one, and all the details on it there. That was the one put forth by Peter Galbraith. So free college is there. And on the other side of the education system, we have taxpayer-funded pre-kindergarten. Since 2006, thereabouts, was when they passed the bill. It's been going on for longer than that. Montpelier has had a goal of expanding the public school system by 2 grades, adding pre-K for 3-year-olds and 4-year-olds. A few years ago, I think it was 4 or 5 years ago, they passed a law that made that voluntary program, 10 hours a week of pre-K, mandatory on all the districts, whether you wanted to do it or not. The next step in this is to take the 10-hour-a-week program and make it a full day year for kids. So you drop them off at 8, you pick them up at 3 or whatever it is, and it would just be essentially another year of school. They want to do it for the 4-year-olds, and then the next step after that is for the 3-year-olds. So this hasn't been scored yet by the Joint Fiscal Office, but the back of the napkin calculations are it's between $50 and $100 million, depending upon whether they do it for just the 3-year-olds, just the 4-year-olds, or the 3 and 4-year-olds, and of course that all comes out of your property tax. It's a very expensive program. What's happening now is they got a grant, a federal grant for 8 supervisory unions it's a $33 million grant for 8 supervisory unions for 4 years to implement the full day pre-K for 4-year-olds. So 8 supervisory unions, and you break down the math, it's about $1 million a year per supervisory union. We have 64 supervisory unions. So when that grant goes away, they're going to be asking for money from you guys, the taxpayers, to make up for the federal grant that's gone. And when they make up for the federal grant that's gone, they're going to, all the other of the 64 supervisors are going to say, hey, us too. If you're paying for them, you got to pay for us. So that won't be necessarily in 2017. They'll start it in 2017, but that's still a rollout that's coming. So that's the end of my presentation for today. There's our gill feather turnip, squeezed, blood red dry, and I'd be happy to take any questions you might have. Thank you very much for listening.